All right, good morning, guys. Happy Monday, the 21st of July, 2025. Back from my trip up to the mountains of Vermont. I think I got a couple of pictures here. Yeah, so here we've got a little waterfall action. Actually pretty cool. Swam up to the waterfall here. Had had Avatar vibes to it. And then should have got a couple other pictures here somewhere. It got me and the wifey. Again, the waterfall, that was my thinking spot. It's where I sat there in the morning and tried to solve the world's problems. Not too sure I succeeded. And then, yeah, the waterfall. So always good to get away for a bit, little reset, little recharge. But then good to get back home and get back to the charts. So let me think. We had a couple trades in the room last week. I took a total of 3 trades last week and sent out 2 of them. One was the Google here. Jumped in, caught Google on the 30-minute squeeze. Took a little paycheck out of that bad boy, and then Shopify. Shop was a beast. Any of y'all catch Shop last week? Those of you not in my room. Now, I bought it back here. I think I sold it around like maybe 122-ish. So took a little chunk out of that one. Had a beautiful 30-minute squeeze setting up. There was an hourly and a daily squeeze setting up. Again, only got a little bit of that one, but good enough for a vacation trade. And then by myself off the mobile phone. Out of curiosity, guys, try putting my indicators on the mobile app. I've been told they don't work. For me, they work. Got to figure out why that's the case. But on the Thinkorswim mobile app, I can get the, I can see my histogram. I can see the white dots. I can see the arrows. We got to figure that out. But the Broadcom, I caught that one here on the hourly. Little pullback hourly squeeze, the green arrow. Talk a little bit more about the green arrow here in a moment. And yeah, made it for a nice couple of vacation trades. But all right, as far as the week ahead here, let's go jump over to the rankings, which I've got right here. Oh, okay. According to Lorna, and Lorna would know, my indicators are simple enough that they would work. Yeah, so maybe you guys and gals can give that a shot. Again, it works on my end, and that's pretty cool. Can be walking the dog, walking the cat. Find yourself a nice 30-minute squeeze. But all right, the rankings for the week ahead here. No major change week over week. Market is bullish. Your strongest index is the Q-tip. Got the QQQ at 95% of its best score. Got the S&Ps at 93%, the RSP, the Russell, and the Dow Jones. Now, a little bit interesting, your strongest index is the QQQ. Then if you look at your strongest sectors and your strongest stocks, a little bit more of that XLU theme. You got the XLU with 100%. There's, SO, CCEP. But there's also XLK at 97%. Cathie Wood's looking pretty good. The Big 10 basket, XLY. The industrials, silver, financials, SMH, gold, real estate. I think a lot to like there. Anything not named, maybe biotech, energy, or healthcare. And then it's going to be an interesting couple of weeks here for these guys. Your Amazons, your Googles, your Microsofts. Correct me if I'm wrong. I think for earnings this week, we have Google and Tesla. So they'll kind of get the party started. Into earnings. Oh, yeah, we did have Netflix. I think it was, last week? But into more earnings, Amazon is really strong. You've got Google looking pretty sharp here. NVIDIA's been a beast. Got Microsoft at brand new all-time highs. Broadcom's been pretty strong. TSM. Tesla's maybe trying to wake up. Could change, of course, after earnings. Apple's getting, we'll call it, a little bit better. Apple's been a bit of a laggard, of course. And then Meta is very neutral in post-earnings. Netflix also very neutral. So for the Google and the Tesla, the big men on a campus for this week, I think Google looks awesome. Now, the tricky thing, of course, about earnings, it can look beautiful the day before earnings, and then the following day, everything can look the complete opposite. From a bigger picture point of view, here's the thing. I think anything other than a huge gap down, and really, if they can keep it above, call it 165, um, might not help your short-term calls, but if they can keep it above the monthly 21 EMA, this remains in a really bullish monthly squeeze. A plus setup, a score of 15, all of the structure, momentum, the trend. So I'm looking at it bigger picture, thinking, uh, well, for one, I don't have to buy it before earnings. I'll maybe live to regret that. But bigger picture thinking, if they can gap it up a little bit, tiny gap up, a big gap up, even if they open the thing up flat, bigger picture looking down the road, it's a good looking monthly squeeze, and I think a target around 220, 225-ish. They can spoil that, I think, after earnings. They flush it, they gap it down, and you're back below 165, 160. It won't make it a bad looking monthly chart, but you'll lose your white arrow. And then to make things just a little bit more interesting here in the short term, if we crank it down a notch to the weekly chart, weekly squeeze, A plus setup, the perfect score of 15. So some squeeze on squeeze action. And then there's a 2-day squeeze setting up and a 1 hour and a 2 hour. So yeah, I don't think I'm going to buy it. Maybe famous last words, but I'm thinking more so into, November, December, early next year. If that squeeze fires, if they can take out the highs, keyword here being should, there should be a path towards 220, 225-ish. And look, you can buy and hold for that play. You jump in, you buy a December expiration, January expiration call. You try to sit through the entire push, which, don't get me wrong, that can work out awesome. You could also look at it and say, all right, well, if there's going to be a path here eventually from 185-ish towards 225-ish, along the way, a lot of your daily squeezes, 15-minute, 30-minute, hourly, they're going to fire in that direction of that bigger squeeze. So think you're back here catching every 15-minute, 30-minute squeeze Google has to offer. Big breakout, monthly squeeze just fired. It's a lot of windage at your back. So we'll see what's up with that bad boy. And then for the Tesla here, the turbulent Tesla, it looks better than it has, but I don't think as good as the Google. All right, so there's those guys. And then, of course, you got Amazon coming up, Apple, the Metas and Microsoft, all of the crowd favorites. All right, moving on from that, though, if you look at the top 20, a lot of really strong scores. XLU is perfect. SO is perfect. You got CCEP, you got the BK, Citigroup, Raytheon, all the way down to the Palantirs, S&Ps, JP Morgans, and the Googles. So point being, plenty to work with, but we got to find the right setup. So if we take all those names, put them on the squeeze watch list, and let's just say my flavor of choice is maybe a 4-hour squeeze. All right, go sort by 4 hour, and the only thing here would really be the SO. My bad, not SO, that'd be CSX. All right, that one's got the bright green A+, and then these guys, this is XLU and CCEP, they've got the dark green A+. So a little sneak peek of a few of the updates I'm working on here. Big golden mine moving forward, call it our next 100 trades. Same setup, same trigger, same moment in time, but really trying to hone in on the entries and exits. So the difference between a bright green A+ and a dark green is just the entry. They've both got the squeeze, they got the white arrow, they got the perfect 15. If we look at, say, let me go back to Google real quick. So Google here on the monthly and the weekly. And again, to be clear, these updates aren't out yet. Taking them through a bit of a test drive. But all right, so for Google here, you have your 15 points. It's all your trend criteria, the structure, momentum. You've got that and a squeeze. By default, that gives you the A plus setup. All right, but now notice down here on the histogram, instead of having the white arrow, now we've actually got the green arrow. Green arrow down there on the histogram, and then I'll zoom in here. Grab your binoculars. All right, we got the green arrow, and now we have that little white dot. What that means is you found your moment in time, compression from your squeeze, all your structure criteria trend, you found the A plus setup. But if you get the white dot and the green arrow, you found it what I think is a sweet spot for a really good entry, which in my book is anywhere from that 21 EMA to about 1.25 ATR above it. If we compare that to, say, the XLU weekly chart, and you might look at it and think visually it's not a huge difference. And frankly, if you're buying shares, it's not too big of a difference. I think it really matters in terms of options. So if we look at the XLU here, across every time frame, you got the squeeze, got the 15 points, but this is not. We've gone from down here having a green arrow to a white arrow. So all throughout back there on the green arrows, you have the perfect squeeze and a really, really good entry. Nice and tight knit at 21 EMA. Now we only got the white arrow. White arrow, no more white dot, and then that label over here is dark green. It's a good entry, could be a little bit better. So what's the key with that kind of thing? I could jump in and definitely buy it. And frankly, if I find that kind of squeeze with a daily buy trigger, all the lower time frame action, I'm probably going to jump in and buy it. But the golden rule is, if I'm not catching it at that sweet spot, in terms of my time till expiration, position sizing, all the above, if I buy the thing at 84, a beautiful setup, a good entry, and they then pull it back to about 81 and change, I think a much better entry, I can't be in a position where I'm uncomfortable. I gave the trade too little time to expiration. I bought too far out the money. I bought too much in size. And now that healthy, normal, buyable dip to a pullback zone, pullback to a buy zone, is making me all antsy. Or it could be a case of, all right, maybe I'm taking half my size up here. I add on the flush. But yeah, a little sneak peek for you there. Going to keep on working on that. So back to the watch list here. All right, so XLU on the daily time frame. And here's why it's important. If I buy it up here around 84, my target is basically 85 bucks. So buy it at 84, play for a push off the squeeze. I catch a move into 85. Percentage-wise, I've caught about a 1.2% move in my favor. But on this example, where's going to be our line in the sand? Probably back here below the daily 50. 81 and change, that's about 3.5% below the current price. Now, keep in mind, I'm buying options. So I'm dealing with time till expiration, the theta, all that jazz. But if I even bought just the shares, I maybe catch a 1% move in favor, a 1% in change move in my favor. And if I'm wrong, I may be taking a 3.5% pullback on the chin. That's buying it back here on the white arrow. If I can catch it a couple of days ago on the green arrow, right, same exact setup, same everything, but now maybe buying it back here around 82. Now my risk is 1.3% in exchange for potentially 3.5 to 4% in my favor. So now think of that over the course of every 50, 100 trades you take. You can make more with a worse win rate buying them back here versus buying them up here. Make sense? So again, all that being said, if I'm looking for a really good looking setup and a really good entry, I could look at SO on a 4-hour chart, or CSX rather. If you want to go check out a daily squeeze, it's just XLU. Again, good entry, not great. What about maybe in hourly? I got to get a battery for my mouse. There we go. All right, the hourly. All right, what do we got here? We got Johnson & Johnson, Real Estate, and the Duke. All right, so I could look at something like a Johnson & Johnson. And that would fit the bill. Squeeze, white arrow. Better yet, the green arrow. I think the bigger thing here, though, and the point I'm trying to make is looking at that watch list. Um, there's a few things, but not all that much. With my favorite time frame, the anchor to being that daily squeeze, um, there's a that could become a really good setup. Like Snowflake could get there watching IBM. DoorDash not too bad. But yeah, I think given the lack of immediate, in my face good opportunity, and then you got to factor in earnings. Maybe being a little patient here out the gate, and then index wise, if you're looking for something to anchor to, there's a 30-minute squeeze here on the S&Ps and the QQQ. I think for better or for worse, that should be your next move. All right, S&Ps push, 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 little flush, 30-minute squeeze. Now on my end, I'm going to look for a green arrow. If I can't catch it on a green arrow, maybe the white arrow. But if they take that 30-minute squeeze, break it out, there's most likely your next leg higher. Break it out, all-time high, all that fun stuff. If they don't do that and they break it short, we got to keep in mind the idea of the market pulling back to a daily 21 EMA at some point. It's one of those things, not really a matter of if, more so a matter of when. And in a good market, it's not the end of the world. If you're locked and loaded with a 2-day till expiration call, you're not going to love that pullback. Been there, done that. But in the grand scheme of things, the bullish ebbing and flowing. They walk it higher, pull back to your 21. They hold it. You jump in, take fresh longs. You buy your hourly squeezes, buy your daily squeezes, and they push. They pull back. They hold it. They push. Will happen again at some point. So watch your 30-minute squeeze on that one, and then same thing here for the Qs. I look at a daily chart, I have to love it. But the kicker is, in terms of putting more money at risk, I love it a lot more closer to 550. All right, the pump and reversion to the mean, the pump, reversion to the mean. If we go take a peek here at hourly QQQ, yeah, it's perfectly bullish. Momentum, trend, structure. If we peep the 30-minute QQQ squeeze, it leans bullish, but no white arrow just yet. So yeah, with big earnings coming up here, all of the typical moving parts, 30-minute QQQ, 30-minute S&Ps could make for a good short-term compass. And then a quick look here at a few of these Big Ten names. A few good-looking hourly squeezes shaping up here. The Apple, the Google, and the Amazon. So the Apple here. Apple actually has a lot of squeezes. It's far from being the strongest name on the board, but plenty of squeezes. The weekly, the 3-day, the 4-hour, the 2, the 1, the 30, the 15, and the 5. Till things change, I'd be a fan here of the hourly. Take it through the trend criteria, got all that, got all the structure, got momentum. 15 points and a squeeze, A+ setup, green arrow, good entry. Green label, good entry. So I like that one. And then the Google here. Took a little bit out of Google last week. Not going to be in a huge rush to jump into a 1-hour squeeze before earnings, which I think are either Wednesday or Thursday. But we'll see what's up with that one later in the week. And then the Zon. Amazon with a 4-hour, 2-hour, and an hourly. And your hourly is pretty sharp. Green arrow, good entry. All of the fixings for a push. But here's the kicker. If we get 2, 3, 4 days of QQQ chopping in a 30-minute squeeze, yeah, you could get a breakout on Amazon. You could get a breakout on Apple. The idea of catching a breakout in those names would be so much easier if you do get a breakout on the QQQ. Then the question becomes, do they try to break it out before Google and Tesla? So all things will figure out here, guys. But yeah, that's pretty much what I got for you there. Apple on the hourly, Google on the hourly, Amazon on the hourly. And then yeah, we'll be patient here, see what's up later in the week. Keep an eye on the scans. Keep on doing what we do. Now that I'm back at the desk, I'm looking for another shop. Can hit it a little bit heavier, maybe hold on for a little bit more. That's not shop, that's QQQ. Looking for another one of these. When I did the daily squeeze scan over the weekend, I think it was just Well Tower. So if you're a fan of trading Well Tower, there you go. But all right, y'all, any questions for me, any chart requests, get them in the chat here. I shall get caught up. And then folks in my room and the MTT room, I'll be with you in a bit, taking you through the open. Speaking of the open, let's take a look here at the futures. QQQ perfectly flat with no lower time frame buy trigger. 2 hour down to a 15-minute, you're neutral. How's the hourly look here? Yeah, I gotta get a battery for this mouse before we go kick off the open. Hourly NQ's not the best, not the worst. You want to really look for signs of exhaustion right now. Your monthly charts are super bullish, your weekly charts are bullish, your daily charts are bullish. But the further and further we get from our daily 21 EMA, we get to a point where things are a little bit stretched, and then your 5-minute chart gets tired. Right? No more perfect structure, no more buy trigger. 15-minute time frame tired, 30-minute tired, hourly tired. To me, tired looks like blue. Neutral 15, neutral 30, neutral 1, neutral 2. All that neutral from the ground up above that buy zone. Again, it's a strong market, so tough to call for when. But at some point, you go from bullish to neutral, neutral to bearish. 5-minute chart going a little bit bearish. Again, at some point, that will kick off a buyable pullback. Or what could be a buyable pullback. We never quite know for sure. All right, good morning, Ram. What's up, my friend? How's Micron looking? A little bit softer than your other SMH names. And frankly, just softer than the SMH itself. Here's NVIDIA, of course. You got Broadcom going for it. TSM's been pretty strong, and a pretty good turnaround here for the AMD. So yeah, not quite as strong as its peers. But that being said, if we go look at the monthly chart for the SMH itself, a lot like the Google idea, really, really bullish monthly squeeze. 15 points, white arrow. And the kicker being it hasn't actually fired yet. When it fires, if it does fire, I think we're looking up here to path into 320, 325-ish. So that being said, one would like to think by default, if they can pump the SMH another $10, $20, $30 higher, and not today, not tomorrow, not this week, just bigger picture thinking, that should benefit all of the SMH components. Now, from a weighting point of view, right, go check out a Raggy favorite here, ETFDB. From an ETF weighting point of view, oops, there we go. So for the SMH on its path from its potential path from 290 into 320, NVIDIA being 22% of the basket, that stands a benefit. TSM's at 11%, Broadcom at 9, AMD at 6, AMAT at 4.5, LRCX at 4.5. Micron's all the way down here at about 4% of the basket. So yeah, to some extent it should benefit. Birds of a feather will flock together kind of thing. But in terms of a relative strength point of view, at least up to this point, hasn't been your strongest name. So for me, the answer in the short term would be a bit more of a focus on NVIDIA, a bit more of a focus on a Broadcom, a TSM. And then really maybe, depending on the trade I'm looking for, more of a focus on the SMH itself. Then with Micron here, wait for a better moment in time. Can they get it back above the 21 EMA? Can they get momentum shifting back to the buy side? Can they get a fresh hourly buy trigger, daily buy trigger? But I mean, keeping it simple, if they can break out the SMH, it'd take a lot of negative news in Micron itself, I think, to not benefit from the push in the group, if that makes sense. Okay, cool. Looks like Mears has got you all set up there in the room. Cool. And then Tim, good morning, Tim. How does SE look? We are about to find out. There we go. All right, what do we got? There's not too much bad I can say about it. And it's not really an SE thing. It's more of a market thing right now. It's a good-looking chart, but they can quickly pull it back to your 21 EMA. And I still think it'll be a good-looking chart. So then it's a matter of, all right, how do I trade that in the short term? It's already made a nice push. One could argue it's made the easy part of the push from that 21 EMA towards the extension. To me, I think you make it more of a lower time frame thing. So I'm going to scale down to maybe a 1 hour, 30-minute, and a 15-minute. And then try to go find my go-to trade. Could be a white arrow or a green arrow on a 15-minute squeeze. Could be a 30-minute. But what I like about that is the name is a little bit stretched above that daily buy zone. But if I can buy it on a lower time frame squeeze, it's a spot where I can, one, find my edge, but also, two, find my edge and control my risk. 15-minute squeeze cranks out a green arrow. I can jump in, buy it, and I can get rid of it on a breakback below the 15-minute 21. I could buy it at $1.69 and maybe tap out on a breakback below $1.68. Versus, all right, I'm going to buy it off the daily time frame. And, hopefully they keep on pushing it. But if they do pull it back a good $10, $12, could get a little uncomfortable. So when things are near their daily 21 EMA, I tend to think a little bit more aggressive swing trading, trying to catch the easy part of that push. So if we take something like Shopify, the goal for me would be, all right, find Shopify in that daily squeeze near that buy zone, which will now be the green arrow down here. Try to catch that move with a little bit more size. Then up here, I'm thinking day trade. I'm thinking playing with profits, jump into a 5-minute squeeze, 15-minute. But really taking my foot off the gas as far as the aggressiveness. I think in a perfect world, to use an easy number, we're getting along somewhere back here. We're catching the easy part of the push. And then to keep it simple, you make $1,000 on the easy part of the push. You can then throw $100, throw $250 at every 15-minute, 30-minute, 5-minute squeeze you get. All right, parlaying that profit until it stops working. If it doesn't work on trade number one, you catch the easy part of the push, you make $1,000, you then take 200 of it, you throw that at a 15-minute squeeze, it goes to zero, you've got a net profit of 800. In the perfect world, Shopify rallies until the end of time, and you keep on parlaying and parlaying and parlaying. All right, Ram watching IVZ. Then I'll get caught up here with the folks on the YouTubes. Got a few good YouTube videos coming your way this week. Yeah, wow, what a move. It's a casual 14 to 20 real quick. Yeah, so that kind of thing, again, I make it very much lower time frame. There's not really any trade I can take up here. That won't be at a max loss and a pullback to the $17 buy zone. And I can size to accept max loss and not get hurt on that pullback. But if I actually want to jump in and trade with some decent size, I'm going to drop down to a 15-minute, 30-minute, 1-hour time frame, and then I'm waiting for the next, next good-looking squeeze bus. So that's what I would do on those kinds of runaway trains. All right, folks on YouTube. Good morning, Mark. Thank you. What's up, Dion? Good morning, Mike. A-Lab. Nice pushback there. Nice. Yeah, really clean. Daily squeeze, white arrow. And looking like a gap into 109 and change. Which for a guy like me who didn't buy it on Friday, again, that'll be the easy part of the push I'd want to catch. If you already bought it last week, it's a great way to kick off the week for sure. The gift of the Monday morning gap. Yeah, great pattern though. Love that pattern. Pump it, chop it. And you got to think a little bit cynical. Their number one goal here in that chop: rope you in long, rope you in short. Pretty much wipe the floor clean with you. Then go on to make that bigger, easy directional move. So our job is looking at structure, momentum, trend, trying to figure out when can I buy it and avoid that 5, 10, 15, 30-day long chop. And ideally, it's more of a shop kind of situation. They're chopping, and then you're getting long on that candle. So yeah, A-Lab was a beauty last week. Awesome stuff there. All right, and then Maurice calling out the same thing. Yeah, I miss that bad boy. Hedgemate, what's up, my friend? Good to see you as always. OKLO. Yeah, another good looking one. It'll be good looking down at $60. But no signs of a pullback in this one for now. Squeeze just fired. You still have a squeeze here on your 2-day time frame, and you have a buy trigger on the weekly, the daily, the 4, the 2, the 1, the 15, and the 5. So it's got a little bit of that shop vibe to it. Daily squeeze breakout, lower time frame alignment. The key is always, my friends, from there, do you have the moral support of mama market? Which I do think you'll get if they can break out the 30-minute QQQ and SPX squeezes. But all right, y'all, I got to jump. Got to go grab a fresh battery here for the mouse pad. And then folks in my room, folks in the MTT room, I'll be with y'all for a moment, kicking off the open. But all right, guys, good to be back. Missed, being at the desk here, being in the action. So thank y'all again. I'll be back with you same time, same channel on Wednesday morning. And we'll catch up and keep it going from there. So thank you again and talk soon. Adios.